All right, guys, good day to you. Yesterday we started talking about trendline breakout, and we said quite a few things about trendline breakout. Maybe I should quickly do a recap of trendline breakout strategy. Okay, maybe I should quickly do a recap. Okay, a recap trendline breakout strategy, and I said it gives a potential reversal of trends. When you see a trendline breaking out, in most cases, the trend is reversing. The trend is making a U-turn. Okay, if it's a bullish trend and then the trend line is broken, it's most likely a bearish trend is about to begin. And then we said the signal the start of a new massive price movement. Because you see, if the market is bullish, an upward trend line is broken, it means most likely in most cases that the sellers have come to the price, sellers have come to the market, and then most likely they will push the price downwards. And the reverse also is the case when the market is bearish and the trend line is broken. It's an indication that buyers have entered the market, and in most cases price will be pushed to the upside. And so if you in your archive of strategies, just like I've taught you, you see, we are still on the subject of how to trade trading market. You see, here now, how to trade trading market. I think we spoke about that somewhere around here. I think so. How to trade trading market. We've spoken about EMA. We've spoken about ADX. We're talking about trendline trading strategy. Then this time around, we're talking about trendline breakout strategy. Trendline breakout strategy, and we already did a study on that and a live training on that. So I'm trying to take a little step further, here now. So I said trendline strategies, that's TLS, that's trendline strategy, which talks about the bounce, the trendline bounce when price obeys and trend lines. And then trendline breakout strategy, that's the breakout, that's what we're currently talking about. Both have tendency of giving you early entries, and this is one of the reasons why I love to use trendline. It gives me very early entries, and then plenty pips in your favor, even up to thousands of pips. Thousands of pips. The two instruments that traded today, which is gold and GBP USD, I use trendline, of course, trendline with one or two other things, confluence, say, to enter my trade, and then both enter, do both profitable. In fact, gold was profitable twice, so profitable during the London session or profitable during the New York session. Okay, so when you combine both trendline strategy and trendline breakout strategy, okay, together, when you combine it together, they work like magic. They are complementary to each other. Trendline is a trading system based on the obedience of trendline. So when you talk about the TLS, trendline strategy, okay, it's when the price obey the trend lines. You see, trendline trading strategy is a system based on the obedience of trendline. Why the opposite is the trendline breakout strategy, when price break through the trend line that is already drawn. Okay, when price breakthrough. And I said there are four instances. There are four setups you're going to be looking for when we're talking about trendline breakout strategy. Four primary setups you're supposed to be looking for in talking about trendline breakout strategies. And here they are on my screen. And first of all, is the immediate breakout. When you have your point 1 and point 2, or point A and point B, okay, and then you see that at the third touch, price literally breaks through your trend line that you have drawn. That is trend line breakout, especially if it's a significant trend line. And I explained that one to you, significant trend line. This happens when price breaks out of a trend line drawn from two obvious uh, peaks of or trough from 1 hour time frame upwards. 1 hour time frame upward. That makes it beautiful. And I love significant trend line because it's obvious to everybody all over the world. And I promise you, professional traders all over the world paying attention pay attention to significant trend lines. Trend line can be drawn on any time frame, just like we said earlier, but we said the one drawn from 1 hour upwards are very significant. Okay, the one drawn 1 hour upwards are very significant, but it does not mean that the one drawn on lower time frame are not important. It does not mean they don't work. Okay, for example, the trend line I did today on gold was 15-minute time frame, but the one I did on GBP was 1 hour time frame. So they work very well. Okay, so we have the immediate breakout. That is when the upward, to the sell side, immediate breakout to the sell side, when an upward trend lines is when price get to an upward trend line, and then instead of bouncing and obeying it, it literally breaks through, and then price just moves downwards. And we have the second one here. That is also a sell, but see, price breaks through the trend line, and before it go far from the broken trend line, it retraces back to the same trend line and is finding a resistance on the trend line, and then price then move down away, to the downside, and that is a breakout and retest. You call it breakout and retest of the trend line, and then or pullback and retracement, but saying literally pullback and retracement. So, and sometimes it retests, it comes to touch it. There are instances it may not really touch it, but very close to it, and then we have the third category, which is one is a buy setup. A buy setup, that is immediate breakout to the buy side. Then see when you have drawn your point A and point B, or point 1 and point 2, and price is getting to the trend line, and this time around, instead of coming down and respecting the trend line, it breaks through and moves away upward from the trend line. And then the same thing happened here now, or the opposite happened here now, or something else happened here now. Trend line, price breaks through the trend line, comes back to the trend line drawn, and then moves to the upside. And then I showed you a couple of examples yesterday. I was showing you this one, and this is a breakout and retest. Bright broke this trend line, then came back to retest the trend line, and then moves in the upward direction. And then we have another example here. This is point A and point B, and on the third touch, price breaks out, and then it moves to the downside. Price move to the downside, and then we have another example here. Now we have the point A, the point B, and then on the third touch, price breaks out and then comes back to retest the trend line, and then moves upward again. This is breakout and retest to the upward side. Breakout and retest. This is the fourth category. This is the fourth example from the slide here. This is fourth example. This is like here now. This is what is happening here. So that's what we are seeing here now. Price point A, point B, and then price breakout on the third touch, and then it comes back to retest the trend line before continuing to move upside. And then we have this example 2. We have point 1, point 2, and then the third touch, price breaks out, came back to retest the trend line again, and then it goes to the downside. I think this is example 2 from our examples here. Example 2, breakout and retest, breakout and retracement, breakout, pullback or retracement. So, and that is that about that. So we say a couple of other things too. We said pay attention to significant trend line broke, because market move far and fast when significant trend line is broken. Market moves far and fast when a significant trend line is broken. You see, the significant trend line are the ones drawn from significant peaks and troughs found in H1. That means when you have 1 hour time frame, and then or 4 hour time frame or daily time frame, and your trend line breaks out from it, and then from obvious troughs and peaks, and then see the in such case now, price moves far away when that trend line is broken. The more times trend line is obeyed, the stronger it is, and the market moves far from it when broken. I wish you understand what this last part is talking about. I wish you understand. Anyway, my next class is going to be based on this. The magic, the stronger, the great magic of trendline breakouts, the great magic. And I've taught that in a couple of classes. I taught that in December, I taught that in January class, and this year, now we're in February class. Now, I would like you to pay attention to my next video talking about the in that case now, you have almost over 90% accuracy. I'm telling you, over 90% accuracy. You know, the more time trend is obeyed, the stronger it is, and the market more far from it when broken. And then we talked about, gentle candles, gentle trend lines are more reliable than steeper ones, and so that's for the bounce. And then the steeper the trend line, the more unreliable it may be, because price may not be able may not be able to sustain the steepness, may not be able to sustain the steepness. Okay, and then we said wait for the candlestick to close when you are entering the trend line. But they said let me quickly go to the chart and let's see some examples. Let's go to the chart and see some couple of examples. So you see a trend line drawn, an upward trend line drawn here when we have point 1 and point 2, and then price rallies up. Price is still moving up, and then at the third touch, price broke the trend line. So what do? Your entries will be at the close of the candlesticks. Your entry is supposed to be at the close of that candlesticks. Okay, at the close of that of that candlesticks. Okay, somewhere around here. But then the strategy I was teaching you says that you should move away from here, and entered at the this week here, just 1 or 2 pips below the week. That's where you set your pending order. Okay, for example, let me go back to the slide. I said, okay, note that there is when the candlestick wait for the candlestick to be closed to close at the touch of the trend line on your chosen time frame. Know that there is something called false breakout. This is to avoid false breakout. Sometimes a false breakout always look real, but after forming a few candles, reverses and gets you stopped out with a loss or break even and continue to follow the direction of the previous trend. Now, this is what I'm trying to tell you. How to enter trades with trend line breakouts. Enter at few pips on top or below trend line breakout candlesticks with sell stop and buy stop. So what I mean here is that the candle that breaks the trend line, okay, enter a few pips on top of it if it is bullish, or below it if it's bearish. That candlestick, just set your penny order, sell stop or buy stop. It gives you a lot of chances to avoid multiple errors. Then it fine tunes and you know it fine-tunes and sharpens your strategy. It gives you opportunity um, to avoid first breakout. Wait for the candlestick to close at the touch of the trend line on your chosen time frame. Place a sell stop or buy stop a few pips above or below the intersecting candlesticks. And then number 3, set TP within the previous significant swing or trail your stop loss. Note that significant and obvious trend line draws global attention. Very good. So meaning majority of traders all over the world are watching for the price reaction at the touch of trend line. So you should expect explosive movement. Explosive movement. So let me get back to the slide here. So you place your sell stop here. Okay, sell stop here, and then price begin to move. So we say we have two ways of setting your take profit. Take profit said set your take profit within the previous swing. This is the previous swing now. The previous swing here, price you have a swing here, but you say within the previous swing, and then by the time you get to this place, you already have a take profit. You already have a take profit. But then you have another option of trailing your stop loss. What do you mean trailing your trust stop loss? As soon as price move a little bit forward like this, what do? To begin with, if you are entering here, where do you think your stop loss is going to be? Your stop loss will be at the last swing. Okay, last swing. I usually love last swing. Okay, but some people they just take their stop loss and then they put it, above the trend line in case if prices reverse back within the trend line, that means that trade is invalid. But saying it's good to put it at the last swing. Personally, I put at the last swing, and then as soon as price move to this side now, so what do? You come to break even. I mean, you shift your stop loss to your entry price. Shift your stop loss to your entry price, and then at that point now, you will not lose any. You are not losing your capital anymore. You have come to break even. You have come to break even, and then so the trading stop loss say as often as you see swing, the moment you see this swing like this, price came down and then you pull up again, and as it continues like this, you shift your stop loss. This is your stop loss that is here now. You shift it to this swing, and the price move down again. Then you see another swing like this. Price move to this swing like this. As it's going down again, you push your stop loss to this place now, and before you know it, the price crosses you out of the trade, and then you're looking for another entry, looking for another opportunity. So you can say that if 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 you have entered this trade and then you've set your take profit, set the take profit like this, you will have you'll have come out with 89 pips. This is GBP USD. You'll have come out with 89 pips. But if you have trailed your stop loss, you'll have come out of this trade with 221 pips. 221 pips. That's almost, that's almost 3 times if you have set your take profit. Almost 3 times. Almost 3 times. Okay. Now, if you have more than if you have set your take profit. So now, then you have another option here. You have point one and point two. This swing, these two peaks, point one, point two, and at the top of the trend line, this was actually news. This was actually news. And that was January 2025. Okay, this was actually news. Okay, so you enter the trade at the breakout trend line, but then in most cases, if you have to wait for this candle to close, you have already missed that trade because the distance is too much from the stop loss. Okay, the reason I will take this trade now is if it's news and I'm on live, I'll be looking for this resistance to be broken when price is down like this. If I'm on live and if I'm watching it and price breaks here now, I'll just switch to a lower time frame, switch to like maybe 15-minute time frame or 5-minute time frame, and I see a candle closes above here, exactly above this one here too. I'll be taking a buy. And of course, news trading in the next 1 hour or thereabout, you're already out of the trade. Okay, so then you come here too, you see my point one and point two. And at the top of the trend line, the price is not obeying my upward trend line. Price breaks through. And then look at it now. And then the rest is history. Massive, massive profit to the downside. Massive movement of the price to the downside. It's amazing, it's remarkable. And then you have another opportunity here now. You have point one, you have point one, you have point one, point two, you have point two here, you have point two here, okay. And then on the third touch, price breaks through the trend line, drawn the upward trend line, and then price moves to the downside. Immensely. You can see the massive movement. You can see from me now. If you have been trailing stop loss, how much profit would you have made? And you can see you will have been somewhere around here this time around 74 pips. But if you are using your take profits will have been somewhere around here because you'll be taking profit within the next obvious swing, and that's going to give you 81 pips. Thereabout. So now we have here too, we have point one, point two, then price breaks to the upside, and then you can see the massive movement. This is massive movement. Then if you have another opportunity here now, point one, point two, at the top touch here, price breaks to the upside, and I told you you're going to be entering, your entry is going to be somewhere around here, the price of 1.26506. Then your stop loss is going to be this last swing here, and look at how price is going. So if you are trailing this stop loss now, if your entry is here, somewhere around here, and then your stop loss is somewhere around here, and then as soon as this price moves, as soon as the price move up, a little bit to this side now, so what do? You shift your stop loss to your entry. Your stop loss comes to your entry, and then before you know it, as price is moving, you're shifting your stop loss to the swing. This is what we call trailing stop loss. I love it because it has very high risk to reward ratio. In most cases, it has very high risk to reward ratio. So, and then it also mean, swing trading. I don't know whether I've explained in your class that there are four categories of traders. There are four types of trader. We have the scalper. The scalper is someone who takes trade, and within few minutes he has entered and has come out of a trade. Few minutes. Those one trade on 1 minute time frame and probably 5 minute time frame. They never use more than 15-minute time frame for their entry. 1 minute, 5 minutes, 15 minutes at maximum. And you see, these people are they have mastered their scalping strategy. That's but that's within few minutes, sometimes within few minutes. They don't stay hours upon hours in the market, let alone days. Within few minutes, the scalper has analyzed his chart, has taken an entry, has come out of the market, and then and has left it. But the issue with the scalper is that he has multiple trades within a day. They can take plenty trades. They can take plenty trades. Plenty trades within a day. That is a scalper. And then we have the day trader. A day trader is another categories of traders. Those are the ones that take an entry, and within a day, within the trading day, okay, they have come out, they have exited the trade, whether they have taken profit or it has entered their stop loss, or they have taken out their stop loss. So these people, they you could spend one or two, couple of few hours in the market, watching their trade being executed. Just couple of hours in the market. But one thing peculiar about them is that the trade is closed within the same day it is executed. Within the same day executed. They really spend their trade really goes over into another trading days, and they really have swap fee to pay. And that about the day trader. Then the next to that is that I said the first one, they are scalpers, and then we have the day traders, then we have the swing trader. A swing trader is just, and that's what I'm explaining to you. The strategy I've just told you now is swing trading. Okay, is swing trading. It's a swing because it's shifting a stop loss from swing. This is like a swing. This is, the market swing. The market is swinging up. The market is swinging up, and so it follows the swing, and then it could ride on a swing until the swing is exhausted. That is the swing trader. And you see, there's nothing. None of the kinds of trader is good or bad. It all depends on the strategy that you have mastered and that delivers results. Because at the end of the day, results or profit is what we are all looking for. So there are no better style in the market. We only have profitable and non-profitable traders. So if you're a scalper and it's profitable to you, you could spend hours and hours behind your screen and trying to get signals and taking multiple entries within a day. It's all well and good. Then if you are a day trader have lesser signal than a scalper, and then it could take a trade and in a couple of hours is out of the trade. Then we have the swing trader. A swing trader can literally be, let us spend days upon days, if not weeks, riding on the beauty of a swing, depending on how much the swing lasts. That is a swing trader. One thing I love about swing trader is that they have better risk to reward ratio. My goodness, they have better risk to reward ratio. A swing trader can have 1 to 5 risk to reward ratio. You can have sometimes 1 to 6, 1 to 7 risk to reward ratio, depending on the swing of the market. You see, that really happens to a day trader. Really happens to a day trader. Okay, so all of them have their pros and cons, but maybe later in the course of the study, we'll do detailed analysis of all these categories of forex traders. So I did that because I wanted to explain to you trailing stop loss. This is the style of a swing trader. And then we have this type too. We have this trend line too. Okay, we have point 1, point 2 here, and then we have the point 3 here. And I told you something the other day. I said when the more trend line is respected, the stronger it is, and the more price moves away when it's broken. Look at the price move away from this thing, and then it jumps. It moves away very fast. There were no pull back, and it just moves away very, very fast. Why? Because this trend has been respected for a long time. Respected here, almost completely respected here, then respected here, then respected here, then respected here. Forget it, it, you can actually say respected 4 times, exactly like four, in fact 5 times here. Because if you look at here now, you see we have number 4. We have number 4 as here now. Then I can tell you I even have number 5. I even have number 5, I even have number 5 somewhere around here. The next one touched again. Then we now have we now have where price now broke through the trend line that was drawn. Look at it now. And then see, trendline breakout strategy is a powerful strategy that we not want anybody to joke with. That none of my students should joke with trendline trading strategy. And look at this scenario again. Look at this scenario again. We have the point 1, point 2, then we have the point 3. Look at point 3 here. Look at the third touch here, the third touch here, and then at the fourth touch, price breaks out. Price breaks out, and then did you see how massive price moves away from it? Price moves away massively. Boom, just jump to the upside. Just boom, I just jump to the upside, and then that was how many pips is that? As in no pullback, bro. No pullback. Can you imagine? No pullback. GBSD 256 pips. My goodness. Mine oh mine oh my. Price just went massively to the upside. And then we have another trend line here. We have a point 1. I have the point 1, then I have the point 2 here, then I have the trend line breakout here. Price breaks the trend line here. Price breaks the trend line here. You see, price broke this trend line here, and then look at it now. Price moved massively to the downside, massive to the downside. You see another trend line here now, point 1, point 2. Then price broke the trend line from here now. Price broke the trend line from here now. Oh my goodness, my goodness. And then to the upside. Look at how price moves, massively moving. My goodness, my goodness. See how price moves massively to the upside. My goodness. Look at it. Then we have this again, point 1, point 2, point 3. Then at the fourth touch, price broke through the trend line and then massively to the upside. Massively to the upside. Massively to the upside. I've just what I'm trying to just do tonight is to give you several examples, because see, I love that two things. First of all, I love it to have understand that even if all you do is you watch the video, you don't write anything down. This thing should go. This thing should be repeated long enough, repeated many times enough to register into your long-term memory, into your subconsciousness, so that literally as you come to your chart, you can actually pick your trend line tools and draw trend line and watch whether it's going to be a bid or it's going to be, price is going to break through the trend line. So we have point 1, point 2, and at the third touch, price broke through the trend line, and then you can see the massive movement to the upside. Massive movement to the upside. Now, don't forget I told you also that when trend line breaks, you have multiple touches. Point 1, point 2, point 3. At the fourth touch, price broke through, and then I told you you're going to be entry at some pips above the current above the trend line. Put your stop loss below that last swing, maybe somewhere around here, and then you watch it go up. Look at it. Price literally went to the upside 104 pips before it started, begin to go down. Because I begin to go down. And then we have point 1, point 2 again, and then at the third touch, price move to the upside. And I have this beautiful example here too. When I have my point 1 here, I have my point 1 pump, I have my point 1, then I have my point 1, then I have my point 2 here, I have my point 2 here, you have my point 2 here, and then at the third touch, price broke through the trend line, and then you can see the massive movement to the upside. Then here again now, I have my point 1, point 1, then I have my point 2, I have my point 2, then look at it. Look at how on the third touch of the trend line, price broke through and then it went massively to the downside, massively to the downside, and it's still going down, it's still going down, it's still going down. This is the power of trend line. And one of my beautiful of using trend line is this. To me, this is more beautiful to me than anyone else. Don't worry, I'll come and explain this to you one of these days. One of these days, especially when I've already seen, okay, price already selling. Here now price is buying, and then I took that risk. But here now I know price already selling, and I now draw this one. This is different from this one. But don't worry, I'll come and explain to you one of these days. Okay, so price is still selling, it's still selling. Then we have it here again. You can see, like we said, that Usually when trend line breaks is the beginning, is most likely the beginning of a new trend. It's like the beginning of a trend reversal. It's like the trend is reversing when trend line breaks out. You know, when trend line breaks out, you have my point 2 there, and then I also have my point 3 here, you know, somewhere around here. Then I assume another point 3 around here, okay, point 3 around here, then point 3 around here, and then price broke through, you know. So where is going to be my entry? Few pips below the breakout candlestick, somewhere around here, somewhere around here. And guess where my stop loss is going to be? My stop loss is going to be somewhere. My stop loss is going to be somewhere this last swing. And guess what? If you are targeting the next obvious pip for your take profit should be somewhere around here, maybe around here. But if you are trailing your stop loss, what do you think happen? As soon as price move to, you know, to this side, you move your stop loss, okay, to your entry price. Right now you have come to break even. That means you cannot lose anything again. You cannot lose anything again. So as price comes down to this side, you push your stop loss to this side. You know, as price, you know, come to this side, you put your stop loss to this side. As price comes again to this side, that means it has, you know, gone like this. You put your stop loss to this side, and then as price move to this side, you push your stop loss to this side, and then price, you know, your trailing stop loss got hit. And look at how many pips you must have amassed by now. You must have gone away with 258 pips on GBP USD, and that is remarkable. That is amazing. That is huge. 258 pips is huge. You can see another example here. Another example is here, point 1, and then I have my point 2. Remarkable. I have my point 2. Then I have the trend line is breaking out here. The trend line is breaking out at this spot. Trend line is breaking out at this spot, and then it goes to the upside. Pum 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 pum. Then another thing is happening here too. Another thing is happening here. You have my point 1. You have my point 1. Point 1. Then you have my, you know, point 2. You have my point 2 here. You know, you have point 2 here, and look at the third touch. Price is breaking out. Price is breaking out from this trend line. Price is breaking out from here. You see what I'm talking about? Price is breaking out from here, and then I told you the few pips below the candle that breaks it out, your entry is going to be here. And then if you're going to be setting your take profit should be, if you're using the next swing or something, maybe somewhere around here. Next obvious swing, okay, next obvious swing is going to be somewhere around here, as a take profit. But if you're going to be swinging, as soon as, don't forget that your stop loss is going to be somewhere here now, somewhere here. As soon as price moves to this side, you put your stop loss to this side, okay. First of all, you take it to break even. Break even is here. Then you put your stop loss to this side, and then price moves again. As soon as price move, you know, as soon as price moves to this side, you move your stop loss. You move your stop loss to this side. Then price move to this side. Price move to this side, and then you move your stop loss to this side, and then eventually, you know, price break you out. You know, this is news now. The news has happened and have pushed the market to the upside, you know. So that's how this thing works. You can see point 1, point 2, and then price broke to the upside, and then bang, you see point 1, then we have point 2, we have point 2, we have point 2 here, and then price broke through to the upside. Price broke to the upside here, and then we have price moving to the. So now make sure you watch this video. If you have any question, drop it on the WhatsApp group. I will attend to. So what I need you to do now is to give me 10 examples of where price, you know, where price is breaking out, you know, where trend line breaks out when there's trend line breakout, you give me all the four examples. Immediate breakout to the sell side, the breakout and the test to the sell side. Okay, like here now, like what I'm trying to give you example now. You give me two examples of this, two examples of this, two examples of this, two examples of this, and then you choose any instrument of your choice. Then you show me that way. You show me like that, and then that's all for the for the tutorial for now. Make sure you watch the next video. We're going to be talking about the point I raised the other time, the power of um of multiple touches of a trend line. That strategy is one strategy you must never forget in your life. It probably give you more profit than anything you could ever imagine. All right, I see you.